Finally, the earning Q1 2021 for SEA Limited has been released. Everybody's jubilating on Twitter. Despite the fact that EPS missed, the stock price has gone up 3%. So I'm here today to give you a full lowdown on the review of the stock pricing with the new data. I want to give you my valuation and also, most importantly, buy trigger. Final thoughts, is it still a buy or sell? Welcome back to Family Investment, and today I want to speak about SEA Limited. Before I begin, please help me give it an early thumbs up like, and also disclaimer that I do not own any SEA Limited stocks. I really do like the company. I monitor them closely because my Discord channel, my Patreon members, lots of them hold SEA Limited, and this review is for you to help you get through your journey. Okay, let me begin. The earnings, they've missed the EPS. Okay, they've missed the EPS. And the stock price is still going up. It's a strange world, is it? With this Wall Street, nobody knows where they are going. So here I want to digest it down. So for the Q1 2021, they've made almost $500 million in net losses. Okay, you know, companies that are making money as they go along. But SEA Limited, despite the regional expansion in Brazil, in Southeast Asia, Vietnam, Indonesia, they're still making net losses, and the net losses gapping is going more and more. So that's one of the main key concerns during the analysis review. But investors do not see it that way. Investors are focusing on their revenue growth. So there's really two sides of the story. So if you focus on expenditure that's been increasing, you focus on the expenses have been losing, but positive investors are looking at the other side. So what are the positive elements that you can see from it? Number one is the revenue growth. Okay, look at the chart, this beautiful chart of revenue growth. It's just going up in a straight line. Despite the likes that Apple and Amazon, they always dip after Christmas. Microsoft, they dip after Christmas and then they build themselves up like a wave. But for SEA Limited, it seems to be going up in a straight line, like a proper, typical social media type company growth, user type growth. So that's where they are. There's a reason why they need to spend money. Okay, think about it. They've been expanding recently in Brazil, in South America. To expand in Brazil and South America, they have to spend money. They are already capturing Meli, M-E-L-E, and to do that, you have to spend advertisement, billboards, apps, and it's number one most downloaded app in South America as well. So that's where the expenses are going. I claim this as a success for SEA Limited. High expense, but they have to go. Geographical region expansion is not easy. And not only that, if you see the user base, they're all still triple digit, over 100% growth year on year in terms of user, over 100% growth in the gaming devices, over 100% growth. And in fact, they even spend money on the likes of Cristiano Ronaldo for their expenses. So you need to understand where they've been spending money, and they've been transparent about it. And now let me recap you with their Graham's intrinsic calculator. This is my valuation method, my style of evaluating a company really quickly. And now as it stands, if you use the like for like EPS, you're not going to get anything. You're going to get zero. It's going to be worth $0. But that's not the right way. We have to use forecast future values. So let's assume perhaps in 2022, perhaps in 2023, that they might be already making profit. And if SEA Limited, if they do ever make profit, they're not going to go EPS 0.10, they're going to jump, boom, they're going to go 0.5, 0.5, 0.5, 0.5. So my speculation is, if you ever see SEA Limited finally make the EPS 0.25 for a single quarter, and they can sustain it for 4 quarters, you are in the money. So EPS 1, current expected growth still over 100%, current 3.5 current yield, that will come up at $262 per share. So whatever you are paying money today is investors are actually placing their bets on when SEA Limited actually makes money in the near future. It could be the next 12 months, it could be the next 18 months. The way at the rate they're expanding, they could potentially hit the target sooner than expected. But if they ever make money, if they ever hit that EPS of 1 for the year, the following year, if they still make 100% growth, do you know that will be the breakaway? When I say breakaway, it means when a company's share price value just rocket. Cryptocurrency holders call it to the moon. This is the time where you're holding to the moon. So you have to hold. If you are a believer, long-term investor, you have to hold. So imagine they go 100% again and EPS of 2. 100% growth. Do you know that SEA Limited is actually worth $524, okay? This might be in 24, 25, 26. You have to wait. To be an investor, you have to wait 2, 3, 4, 5 years. Is it worthwhile waiting? So this is the period where you should accumulate and just hold and buy. Buy on the dip, buy on the dip, waiting for the breakup to hit the 524. If I were you, the investor, that should be the target focus you should be in. Now, let's go to my Fibonacci retracement chart again. So I did this chart before looking at the earnings. I'm going to look at the chart now. So back about 2-3 days ago, when I look at this chart, they were sitting about $200 per share. And I said there was a strong support line. I've mentioned that it was about 4 times they hit the support line. Very, very strong. Even if they dip, they really rebound really quickly. I mean, the lowest they could go was 180. That's what I claim. But no, they actually did well on the earnings and they rebounded. So now they've remodeled 2 floors above. They're now going towards the $226 floor. And now I think, you know, it could go up and down. Like I said, this year, they have already forecasted what are you priced in just now for SCA Limited. It's already the future value when I start making profit. It could be, as I said again, 12 months or 18 months or 2 years. So be patient. They could be going sideways, up and down. To retry that high of 280 would be, you know, very, very ambitious. Even if they do hit that high, you know, I would take profit because they'll be fluctuating between this band of between 200 to 300, okay? Between 230 to 300, they'll be fluctuating until they actually make profit, and that's when they're gonna start breaking away. And if they make profit again following it breaks away. So as you are, buy trigger point will be anything that's near the 200, the 214 level. I think it's a good point to buy in. Swing trading or long-term holding, that's a good time to buy in. Buy as much as you can afford. Take the risk that you can afford as well. So don't just all jump all in on this. But then this is where we are. But if they do fall, even if the inflation rate, everything occurs, it will fall to the next floor at 180. So play your risk reward ratio. For me, my buy trigger has always been 201 or 215. That's what I share with my Discord and my Patreon members. And if they go higher, wait for it to come back down and buy. But if you want to buy, if you buy at 226, you know that the more higher you buy, the lower the reward that you'll be getting. But again, great company. Wait for the breakout. That's what I am excited about. So what are my final thoughts for SCA Limited? Overall, as a person who never holds a stock, I think the earnings was great. It's a bit disappointing on the expenses side, but it can be justified now because of the expansion in Brazil. If they never expand in Brazil and they still make such a huge loss, I would be concerned. But the way they're going, the way they're marketing, the way they're trying new things, I can accept the high expenses just now. But they have to show a bit of a return for investors. You know, investors can be patient only for 12 to 18 months. So they have to make sure that they do not stop this momentum. Great company, but as a long-term investor, when I say long-term, I'm not talking just 5 years, I'm talking about 10 years. But the next breakout is around the corner. When I say around the corner, it could be 18, it could be 24, it could be 36, or it could be 60 months. So within this 1 to 5 years, you see a breakout, and if it goes to the 524 range, and that you will be laughing. 524 as a basic stable range. And you know what? People pay for future values. Who knows if it actually makes EPS of 2 for the year? It could be going even higher because people are always forecasting future values, but the base level should be 524. So for you retail investors out there holding on this, who might have bought way before 150, before 100, just hold it. This company is expanding really quick. And from my consensus, speaking to my friends back home, back in Southeast Asia, Singapore, Thailand, SCA Limited seems to be becoming a household name, like us, Amazon, a household name. So this is me. I hope you enjoy this. I hope you like and subscribe for future videos like this. Also share with your friends and family if this would be useful for them. Thank you very much. My name is Alex Go and hope to see you soon.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos. Bye!